I have avoided talking about this for a long time, but this is the elephant in the room. The OKB token by exchange OKex continues to rise non-stop. Now the question is, does it make sense to jump on this rally? Everything else is going down, OKB is going up. What's actually going on here? This is the performance today, here's the performance this week, and here is the performance this month. Something is going on. The chart looks like a hockey stick. And the question is, how much longer can this rise? And what is causing this rally? We are now at $245. And there are, of course, news that are behind this rally. It's a token burn that reduced OKB's supply by 93%. There's also technical development, so the migration to X layer. Now this channel focuses on the on-chain data. It focuses on demand and supply dynamics. We try to figure out where the price is going from here. This is not a channel that just reads the news. Because crypto is a player versus player game, and whatever in the news is already known by the market. We have to figure out things that most people are not yet aware of. Now here's a chart a lot of people tend to ignore. This is the relative valuation of OKB to Ethereum. Now OKB is listed on the Ethereum chain, and interestingly enough, in the past we saw the price peak at very similar levels. But this recent rally is different. We have finally crossed that resistance by almost 70%. Now on the Ethereum chain, we've got roughly 18,000 holders. Not all of those holders are created equal, so let's have a look at the details. We have seen that with the recent rally, a lot of new wallets started interacting with the token. Prior to that hockey stick move, we saw less than 100 wallets interacting with the token every day. But since volatility shot up, we are close to 1,000 wallets trading the token. The ratio of new to returning users, though, isn't really changing over time. Here we see how attention moves in waves. This is the number of buyers and sellers over time. Currently there is a lot of attention. But again, the ratio of buyers to sellers doesn't necessarily change that dramatically long term. Those charts, by the way, they start in April of 2019. Those are very long-term charts. But the most important of all of the on-chain charts is probably the ones over here. This shows the number of retail investors versus whale investors on the Ethereum chain over time. So this is just the last month, and to be counted for the chart on the left, a wallet has to hold at least 4 OKB tokens. At the current price, it's roughly $1,000 worth of the token. On the right, it's a 10x in minimum holding, so that's now $10,000 worth of the token, or 4T tokens. On the right, it's 400 tokens, or $100,000 worth of the token. What do we see? We see how all wallet cohorts sold into the rally and how the majority of selling happened by the heavyweights. So the whales apparently are selling, yet the price is shooting up. What on earth is going on? Let's compare OKB to other exchange-based tokens. The largest one is BNB, that's also fueling the Binance Smart Chain. It's got a market cap of 117 billion for good reason. There's still a lot of activity on the Binance Smart Chain. OKB is at 5 billion. If you exclude the BNB token and we just look at the direct competition, there isn't really that much more upside anymore. It would be surprising if OKB was to make another 2x from here. It would push the market cap even above Uniswap, the largest decentralized exchange across all blockchains. Most of the times when we see rallies like this that bring an asset to a market cap that's not sustainable, we tend to see a lot of capital getting injected into the asset via the perpetual futures, via short-term leverage on the asset, so via bets and derivative contracts. This is not what we see for OKB. This data is very surprising. So have a look at the spot market. There was $1.3 billion worth of trading volume on OKex. No surprise here. But have a look at the perpetual futures market. Yes, there is some activity on Gate.io, 322 million worth of trading volume, but it's much smaller than the spot market. And this is not common at all. It's also surprising that most of those traders on the perpetual futures are not betting on falling prices. So for whatever reason, the perpetual futures traders are still bullish despite the massively inflated market cap. The open interest did shoot up, but overall it's still below 30 million. This is extremely low given the market cap of 5 billion. It looks like there's some kind of manipulation happening on the spot market directly on the OKex exchange. On-chain, people are definitely taking advantage of those higher prices and they're taking profit, they're selling. The liquidity on-chain is quite small. Just have a look at this. The most liquid pool has only $180,000 worth of the asset. It looks like the majority of the remaining supply after the burn is held by the market makers and is held by the centralized exchange itself. And it seems like that centralized exchange is not necessarily trying to manipulate the price short term via the perpetual futures. They simply just try to keep the price high. What's the fundamental reason behind this? I don't know. It's definitely a very costly experiment. Is this because the token itself is maybe held on the balance sheet, making OKex look a bit more liquid than it actually is? Is there something going on similar to the FTT token with FTX? Your guess is as good as mine, right? This was the FTT token that blew up in everybody's face because this was the collateral of the exchange that was worth nothing after CZ of Binance started selling. Does it make sense to get into this rally now? I personally stay away. The market cap is already very, very large. The price action is completely controlled by a few people on the OKex exchange. The whales are dumping massively into this rally and they tend to be the smart movers. And I want to be invested in assets where we actually have organic growth, where there's not too much manipulation, or at least when there is manipulation, that there is a clear sign that this manipulation will potentially die down. That's not really that clear for the OKB token. In the past, the OKB token corrected at very predictable levels and it went down by 60, 70, 80%, but now we are beyond that resistance. And I don't think that the market cap will go to 50 million or to 100 million. I don't think that OKB will be worth more than BNB. So there's likely going to be a turnaround at some point, but really there's so little liquidity in the token, both on-chain, but also in the perpetual futures, that the extent of a potential short squeeze is very hard to quantify. So I think it's best to just ignore what's going on with OKB and not bet in any direction. Things will turn around, but they might not turn around today. Maybe it makes sense to start shorting once the deflation happens and once the asset has cooled off somewhat. So maybe when attention on the asset is lower again, maybe in 1 or 2 months. Now, wherever there are patterns in price movement, there's a potential opportunity. A lot of people say that it's just random, that there's only luck involved in trading and in active investing. But really, once we have repeatable patterns, it's not. So let's look at this fundamental pattern. This is Dogecoin as an example. Very often, we see prices shooting up extremely quickly to then deflate over a very, very long time afterwards. So for whatever reason, the price moving up happens much faster than the price moving down. We see this in Dogecoin. We also see this in Floki Ino, right? Just have a look at how quick this rally happened and then how long it took to deflate again. And it doesn't just happen with meme coins, right? This is XRP. It went up quickly to then subsequently deflate for a very long time. Or here, right? The rally happened just in a matter of a few days. A secondary rally happened, but then again, the deflation took a long, long time. So there is obviously some kind of pattern here. And this is across the entire crypto space. And there is a fundamental reason for that. I believe that reason is attention. People say that we live in an attention economy and that attention equals money. And for crypto, that's exactly the case as well. As there is more attention on an asset, the price tends to go up. Now, why does it go up much faster than it tends to go down? Because usually there's some kind of event that happens that brings all the attention on an asset. So people read the news and they wonder, should I buy TON now? Should I buy XRP now? Should I buy YZY? Whatever it is, right? There's always something going on, and attention means potential purchases. There's also influencers that talk potentially about small cryptocurrencies that then bring a lot of purchase orders with it, right? When thousands of people watch a certain video on a small altcoin, then of course this has some implication on the price. And so we've got this overall capital pool that tends to grow over time, right? Crypto is still a growing market, but within that capital pool, it tends to concentrate towards a few assets at different points in time. Once there is attention on an asset, the price goes up, but then if there's no new news, then the attention tends to fizzle down and tends to go to the other assets. So it's a bit of a game of whack-a-mole, right? There's asset A that gets pumped up, then it's asset B, etc. And so this is where most people lose, right? Most people try to find the needle in the haystack, the 1, 2, 3, 4, 5 altcoins that made the multiple X returns, while the vast majority tends to go down. How likely is it that when you're buying the next recommended altcoin, that's going to be the next KeyCat or the next dog in me or the next GP token? The likelihood is rather low. You're probably ending up rather with Coquino or with Memecoin or with the OKex token. If you're really honest with yourself, when you look at your altcoin trading and you compare that performance not to the US dollar, but relative to just buying and holding Bitcoin, Ethereum and Solana, how much did you actually outperform with the active trading? Very likely you underperformed. And again, this is because this is a rigged game. There are a few people that influence the market, that push up prices, and then over time those prices deflate again. I'm doing the exact opposite. I'm trying to find the tokens that got hyped, but where then that hype is dying down, where we're already in the deflation. And then I bet on relative valuations that those kind of assets continue to do worse than Bitcoin, Ethereum and Solana. So while the vast majority of retail investors, they just buy what the influencer has shilled, what the influencer is promoting, where the influencer potentially even got money to promote it, I do the exact opposite. I bet on falling prices at that time. So let's say Elon Musk tweets about Dogecoin again, Dogecoin pumps up, the retail investor gets in. That's when I put this on my watch list. And I'm looking at what point in time is it starting to deflate. And I bet on falling prices over here. Just have a look at what I shared on February 14th. I'm entering a Dogecoin relative to Bitcoin short position. Then 1 month later, I sold it. And that was because Dogecoin underperformed Bitcoin at that point by 32%. So that's what you want, right? You want underperformance when you bet on falling prices. There are a few details to this strategy, but it is a long-term winning approach. Just have a look at a few trades that our community has done. Now, I've actually opened a capital pool where the community members, the premium community members of this channel, were able to pay in. This capital pool, unfortunately, has already been closed because we have hit our maximum deposit limit. We are still trading with this until end of the year. I will continue to share the performance here, but it just shows how constantly we can make money by doing the opposite of what most other people are doing. This is 1.5 months. The maximum drawdown from top to bottom was only 2.6%, and we are already at an annualized return of 78%. Before running this capital pool, I've done this approach myself on my own capital, and that's the return over the last 4 years. So this is just a chart from Excel. This is monthly data. Had I just dollar cost averaged into Bitcoin, I would have gotten the return here marked at this gray line. But because I also did shorts on very poorly performing altcoins, I got the return indicated here in black. And I know it can be a bit daunting at first, doing something completely different, going long one asset, going short another asset, doing an entirely different approach compared to just buying an altcoin, just following an influencer that promises you the next 10 or 100x. I know this is a different mindset, but again, we have to do the opposite of what most other people are doing. I created some tutorials to make this as easy as possible. If you want to keep it brief and you're busy, you just have to watch 2 videos. How to use perpetual futures on Hyperliquid and how to do risk management with relative valuation bets on Hyperliquid. It's only those 2 videos and they are in total just 1 hour in length roughly. After you have watched those 2 videos and you've joined the community, I will then send to you my favorite trade. Now that favorite relative valuation trade tends to go up quite consistently, and I've got a strong conviction that it will continue to do so. And because of that, if you enter that particular trade and you do not make money after 1 month of holding this trade, I will refund you 100%, no questions asked. I'll refund you for the premium membership. The monthly rate is currently $125 US. You can either pay via credit card, or if you want to pay in crypto, you can do that as well. For crypto payment though, the minimum duration is 3 months. But again, after 1 month, if you don't make money with that trade, I will just refund you. You can watch all the videos basically for free. And it's not just about the videos, it's also about the trades that I share in real time, where you can basically manually copy trade what's currently being done with the capital pool. Yes, the capital pool is currently closed, but if you join the annual membership, you will get the chance for early access to the next pool that will start at the beginning of next year. So if you don't want to invest the time, you instead just want to invest the capital, let this run for you. Then with the annual membership, you will get that offer first to join before the deposit limit is hit. A link to Premium should pop up directly over here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.